Hi guys, so this is going to be a video on how I build my list of earnings winners. So previously I've posted a video called how I make my watch list, and in this I took you through the process of how I go through my master list of earnings winners of every earnings season and then build a daily watch list from it. So as soon as I posted this, a whole bunch of you commented asking, how do I build that original list? So in this video, I'm going to take you through the process of how I do this every single day, step by step. So this is the scan that I use to find the earnings winners. This is a software called TC2000, and I use it as my scanning and charting software. This is the only condition that I put in there, and I'm going to take you through each part of this formula and tell you why it's there and what it means. So let's do the easy one first. C greater than 1 simply means that the price of the stock is greater than $1. And I put this there to remove all the penny stocks. This simply means that the average dollar volume traded of that stock is greater than $1 million. And this will vary for each one of you depending on your account size. The smaller your account size, the smaller this threshold can be. So if you're trading a 5-figure account, it could be simply 100,000. And if you're trading a 7-figure account, then you want $1 million or more in liquidity per day. Now, there's two basic ideas to what this scan is doing. The first is it's looking for stocks that have greater than twice the average volume. So the scan for that is V greater than 2x the average volume of the last 20 days offset by 1. And we offset it by 1 so that today's volume does not interfere with this average. And the other main part of the scan is that the stock has made a 2 ADR move. What does that mean? So ADR is the average range that a stock trades in a day. What I am looking for is a stock that has made more than twice its average daily range. So say on average, a stock trades a 5% range. This is going to scan for stocks that have more than 2x their average daily range, or in this case, more than 10%. So the scan and the formula for this is C by C1, which is showing me the percentage change today, is greater than 2 times the average ADR. That's the formula for ADR. And these are just simple mathematical operators. And if you work out the formula, then you'll figure out why these are needed. And if math is not your strong suit, then trust me on it. And the last qualifier that I put in my scan is that C is greater than open, which means that the close is higher than the open, or that the close is in the top half of the candlestick bar. And these are two conditions that basically signify that that day's candle was very bullish. And if you want to understand what this means visually, I would highly recommend the Candlestick books by Steve Nyssen, which give you a good foundation on which candles are bullish and which are not. So all of these criteria put together give me a very short list of about 10 to 20 names that have made big moves in the day on really big volume. And that's the basic idea of what I'm scanning for. So the idea, if you think about it another way, is that if a stock has made a big move on earnings, then it should have made more than a 2 ADR move on more than twice its average volume, right? I've basically taken that idea and put it into a scan. Okay, let me go through a few examples. Now, there are 3 things that I look for in an earnings winner. Once stuff starts to show up on that scan, this is my checklist of the 3 things that I'm looking for. The first is is that stock breaking out of a range? So if a stock is an earnings winner and say has made a huge move on earnings and is something that I want to add to my watch list, then I want to see it break out of a range. And I'll show you examples of stocks that are breaking out of their range and stocks that are not, so you know exactly what to look for. The second criteria that I look for is the stock in an old trend or a new trend? And again, I'll show you how to quantify what an old trend is and give you examples of what an old and a new trend look like. And the last thing I want to see is, does the stock have a catalyst? Now, of course, if it's an earnings winner, then I want to see it have really strong earnings. And while most of the stocks on this list are going to be earnings winners, there are a few which have other news catalysts. I'll give you a list and examples of all of those as well. But if a stock has made a big ADR move on really high volume, then I want to see it being accompanied by some sort of reason. The reason being a catalyst. Okay, now let's go through examples of what these three look like. Okay, so what do I mean by is the stock breaking out of a range? Let's take a look at EVCM. So this is a stock that popped up on my earnings winner scan yesterday, and you can see clearly why it did so. The volume was more than twice the average volume, which is denoted by the white line here. And the ADR was more than twice the average daily range of the stock. In this case, the ADR of the stock is 5% and it moved up 13% on the day. This is what I define as the range of the stock recently. As you can see, every time it came up against this blue line, it would go back into the range. And on this day, it finally broke out of that range. So this is a perfect example of a stock that is breaking out of a range. And this stock definitely meets my first criteria. Let's take a look at OCUL now. This also popped up on the scan yesterday, and the same reasons why. Volume is more than twice the average volume, and the range is more than twice its average daily range. But is this stock really breaking out of a range? This blue line denotes the recent range of this stock, and every time it comes up against this level, it just goes back down. It was rejected here, it was rejected several times here, and even yesterday, it closed right on this range. So what would I do with the stock in this case? Does it meet the criteria or not? So as of now, this stock does not meet my criteria. It did not break out of the range. However, it looks very constructive, and if it could go higher, probably tomorrow, I would be interested in looking at it again. So what I'm going to do is set an alert slightly above this blue line where the range break would be valid and leave that alert there. So if and when the stock actually breaks out above that alert level, I would get to know, I could take another look at it and then maybe add it to my earnings winners list. But as of now, I am not going to flag the stock and just pass on it. Okay. The second criteria for whether or not a stock makes it to my earnings winner list is if it has a new trend versus an old trend. Now, what do I mean by old versus new trend? So let's take an example of someone who calls himself the stock market scientist, who sent me this DM with the stock from his own local market, this is not the US market, asking me if this would be a valid setup. So he says, do you like this shared setup? Earnings gap plus moved on higher volume and now getting tighter on key moving average. Okay, so it did have an earnings gap, but would I be interested in this stock at this point is the question. The criteria that I'm going to use now is a very simple rule. Don't buy a stock after it has already made 3 legs up. So why is this? Because in this case, it's usually overextended and the probability of a 4th leg is very low. So let's take a closer look at the chart that he sent us. This was the earnings gap that I believe he was referring to. Now, this would not even show up on my scanner because I don't think it's done more than twice the daily range, or probably it has. Yeah, it would show up. And the volume is definitely high. So even if I added this to my watch list here, it's made 1 leg up, comes back down, makes a 2nd leg up, comes back down, makes a 3rd leg up, comes way back down, and now is trying to make a 4th leg up. I don't like taking stocks that have already made 3 legs up because the probability of this 4th leg is much lower. And the 5th leg is even lower than that, and the 6th leg is much, much, much lower. So with every consecutive leg that it makes up, the odds are going to be falling against you. So personally, after 3 legs up, this is where I would remove this from my earnings winner watch list and definitely not be looking to trade a breakout in this at this point. Let's look at a few examples from our own US market on what this looks like when trading earnings winners or scanning for earnings winners. So TMDX, it's a popular stock among all breakout traders. And yesterday it showed up on my scanner because again, it had made a 2 ADR move on more than twice the average volume. Now, look at how extended this stock is. Does this look like an old trend or a new trend to you? It's made 1 leg up, it makes another gap on earnings, another leg up, another gap on earnings, another leg up, another gap on earnings, goes sideways pretty much, another gap on earnings. And look at my notes here from the previous time that it showed up on my scanner. I've written old trend, 4th EP, and it did beat, and that means it beat the earnings. This is the 5th time it's gapping up on earnings. Do you think I'm going to add this to my earnings winners list? No, I'm not, because this is clearly an old trend, and I don't like trading old trends, simply because the probability of them making a 5th leg up is much lower. If you think about this logically, a lot of good news is already priced into the stock. There's no surprise, there's no neglect, and a lot of people have already been accumulating the stock. So a lot of buyers are done buying this and would now be looking to take profits on this. So the boat tilts more towards sellers the more we keep going up, and more profit takers come in and fewer buyers are still left to buy. So that is the logic behind why an old trend has a much lower probability of actually working out. Let's look at another example. This is another stock that popped up on the scanner. And in this case, you can see it's a really fresh new IPO, just a few days old. Huge gap, huge range expansion, huge volume. This little white box actually means that the volume has been truncated. And I have set my volume settings such that if a stock makes more than 5 times the average volume, then rather than showing me the whole bar, it just truncates or shortens the bar and puts a white box above it. And that is done so that the scale of the volume is not completely thrown off by one big bar, which might be an anomaly. And for my purposes, this gives me all the information I need to know. It's telling me that the volume was more than 5 times the average, or in layman's terms, really, really big. So is this an old trend or a new trend? Well, clearly this is the start of a new trend. if this stock is going to enter a new uptrend, then this is day one of a new uptrend, right? So this is a stock that meets my criteria 100% and is the ideal type of stock that you want to look for if you're finding earnings winners. Something that has been in a long neglect and has just started a new fresh uptrend. And so it has a long way to go, a lot of buyers still left to buy, no one really sitting on profits looking to book profits or sell into this. All the stars align on something like this. Okay. Now, my third criteria for putting an earnings winner stock on my list is that that stock should have a catalyst. Now, what is a stock catalyst? There are two types of catalysts that a stock can have. The first is stock specific, and the second is group specific, and I'll come to that in a moment. The most common type of catalyst is the earnings. Now, this could be positive or negative based on how the earnings turn out to be. But for my purposes, since I'm mostly a long-only trader, I just focus on good earnings. In the case of biotechs, you'll often not find any kind of earnings data since they are all experimenting and developing drugs and have not really started selling anything. So in the case of biotechs, it's either trial data or FDA approval. And those will create huge gaps in the stock and end up acting exactly like the earnings does as a strong catalyst for that stock. Another really common catalyst is a new product. So think of Apple when it launched the iPod, or think of on when it started selling those sports shoes, or Lululemon when it comes out with the mirror. Any company coming out with a radical new product can also serve as a catalyst for that stock to start a new uptrend. New CEO is another really strong catalyst, especially if the market does not like the previous CEO and he's being replaced by a superstar CEO, who has a really good track record. Then this can gap up a stock and serve as a catalyst. Entry in a new market is usually really positive since that leads to a lot of revenue expansion for the company. So think of an American company that's also starting to operate in South America or starts to sell in Asia. That can be a strong catalyst. A new government policy. So this can be super strong since it changes the outlook for the entire industry often for a stock. So think of solar stocks recently or EV stocks. Recently, with the new administration, they were given a lot of subsidies, and that brought down the cost of their products a lot, increased their margins, and it led to a huge surge in a lot of solar stocks temporarily. Partnerships or JVs are another super common catalyst. So usually when two stocks partner up, it usually leads to a gap up in one of them and a gap down in the other, because one usually benefits a lot more from the partnership than the other does, or one ends up overpaying. And these can also start a new rally in the stock. Now, there's also catalysts that are group specific and not just stock specific. So they affect the entire group or industry that a stock is in. So think of it as, say, if Bitcoin gets a boost, like a new country adopts it as its formal currency, or government regulations against Bitcoin are slashed, that action itself serves as a catalyst for the entire crypto sector. So at a time like that, you will see stocks like Mara or Riot or Bitto or the ETF block, all of them running together based on the same news. And that is also a very valid and strong catalyst for stocks. Or usually there'll be one or two groups at any given time that become really hot groups, and you'll have a buzzword. Like currently, there is a new technology called AI, and AI itself has just become a buzzword. And any company that announces the launch of any product that contains AI, or even a company that announces its plans to look into AI, immediately gets a boost. Like Lucy, for example, last week announced that it's going to develop AI glasses or eyewear, and suddenly got a pop on that because it put itself into this really hot group. So how do you find these catalysts? Let's take the example of EVCM. This stock popped up on my earnings winners scan the other day, and it met all the other criteria. It was breaking out of a range, and it was starting a new uptrend. So I wanted to check what the catalyst behind this big move was. So here's what I do. I go on this website called finviz.com, and this is completely free, especially for what I'm going to be looking for. The data is completely free, and you don't need to create an account or buy a subscription. So you just go on finviz.com and type in the ticker name. In this case, I typed in EVCM, and you scroll down to the part where you start to see all the news articles about it. So after you've searched for the ticker, you look for the latest news that the company has. And this is the news on the day of the gap up. You can see in the morning, it says, management software company EverCommerce explores sales. Sources. And very importantly, you want to check who is publishing this, because the quality of the news service as well determines how legitimate that news is. So in this case, we see that Reuters is reporting this, and that is a very high quality, legitimate source. So that means this news is trustworthy and reliable. Now that we've established that the news is reliable, let's check how strong this catalyst is. So usually when a company explores sales, it is a pretty strong catalyst because it's very likely that this company will be bought out on a premium or at a much higher price than it's currently trading at. So this can act as a very strong catalyst. And based on this, I would add this to my earnings winners list. Now, so to summarize the three criteria that I use to determine if a stock is an earnings winner or not, the first is the stock needs to be in a new uptrend. The stock needs to break its range, and the stock needs to have a strong catalyst. Now, if these three criteria are met, then bingo, I add that stock to my earnings winners list. Let's see a recent example of this. So on this day, this is a stock that I took in the pre-market. It was starting a new uptrend. This had clearly been in a downtrend for a really long time and had been neglected and was just starting a new uptrend here. It was breaking out of a range. This $25 level had been resistance for this stock for quite a long time, since last August, and it had finally broken out of that, even in the pre-market, and as soon as it did, I entered. And it had a super strong catalyst, which was strong sales and margin expansions, so it was an earnings beat. So all three criteria were met, and bingo, I added this to my portfolio and to my earnings winners list. So the last thing I want to touch on is how stocks come off this list. So me, myself, and I asked me, that's the name of the person. Thank you so much for sharing your watchlist process. Great. Are the earnings winners your only universe? And if the earnings in the next quarter are bad, they get off the list. Yes. So the earnings winners are my only universe. And why is that? Because I like to focus on one setup, and I highly, highly recommend you do the same. Otherwise, you're just going to be the jack of all trades and the master of none. Or as my trader friend and I like to tell each other, you'll be the jackass of all trades and the master of none. So focus on one setup. And for me, focusing on the earnings winners is what works best. Psychologically, I am someone who likes to know the reason behind why a stock is going up. Or if I'm putting on a huge position, I need to know what the driver behind that stock is going to be. And only operating within the universe of earnings winners or stocks that have a strong catalyst helps to satisfy that psychological need. Otherwise, I get very itchy, very uncomfortable, and usually will just get out of the stock and not be able to take a big enough position. So work with your own psychology, figure out if this is an innate need inside you, and if this is a setup that makes sense to you and might work for you. So when do the stocks come off the earnings winners list? Okay, so the first criteria is if the next quarter's earnings announcement is coming out within the next week, then I just take those stocks off the list. So these stocks have a shelf life of a maximum of 3 months because earnings announcements come out every 3 months. So tech, for example, this is a stock that I still own, and it has earnings that is coming out the next day. So if I already have a position in that stock, I only hold it if I have enough cushion. And how do I determine if the stock has enough cushion or not? I just define cushion as 3 ADR of that stock. So tech, for example, let's take the example. The earnings is on 426 and today is 424. That means tomorrow this stock is going to come off my list. And by tomorrow, if it doesn't have a 3 ADR cushion from my buy point, which was here, then I'm not even going to hold it into earnings. So my entry was at $44. You can see my buy arrows over here. The ADR of this stock is 3.5, and I always have this number on my charts. So I need the stock to be at $44 plus 3 times 3.5, which is 48.62 before tomorrow. So somewhere around here. And if it's not around 48.62, then I don't have enough cushion and I don't have enough comfort in holding this through the earnings. And I would have exited the stock out completely and removed it from the earnings winners list. Now, why 3 ADR? Just because I like to have a big enough cushion. Stocks on earnings can make highly unpredictable moves. Usually they'll move around 1 to 2 ADR, but sometimes if the earnings are particularly surprising, they can move up or down 3 to 5 ADR. Now, 3 ADR is the bare minimum that I need. And if the stock has, say, a 5 ADR or 10 ADR cushion, that's even better, and I would feel even more comfortable holding it. A lot of this will also depend on the market environment. So right now, since we're in a bear market and the market environment is not very bullish, in fact, if a stock just had a 3 ADR cushion, I would probably still take half off and hold a very small piece into it. But in a bull market, I would be happy to let the entire position go into the earnings because the market as a whole would be a lot more forgiving if the earnings are bad. Now, there are a few other reasons why I would take a stock off the earnings watch list, earnings winners list. So if a stock goes down more than 2 ADR on more than twice the volume, then I would be likely to look at it and take it off. Or if bad news comes into the stock, again, I want to take it off the list. Or if I notice major signs of distribution, like multiple down days on large volume, then again, I would want to take that stock off the watch list. So let me give you an example. This is FSLR, and on this day, it met the criteria and went up. It had recently broken the range. It was starting a new trend and had a strong catalyst. So this is when I added it to my earnings watch list. But within 5 days, it did this. And the candle is pink because it made more than twice the volume and made more than twice the ADR move to the downside. So there might have been news I can't recall, but the stock did gap down and move down very sharply on high volume. So this would get off my list immediately. So these are the two reasons why I take stocks off the list. One is either if the earnings are coming up within the next week, or if the stock shows signs of distribution or bad news. So let me know if this was clear, if this was helpful, if you have any questions or comments. As you know, I read every single comment and respond to it. So please let me know if there is anything that I can do to make this more productive for everyone. And if these aren't helpful, there would be no reason for me to continue doing these. So thank you, and let me know.